Hello all, good morning. So today we'll start with unit 6, which is calculating the basis of the assets. So we'll see what exactly the calculating basis of assets. So before understanding the basis topic, let's discuss couple of examples. So let's say there is a taxpayer. Uh, the taxpayer buy the property house for $100,000. Okay, and now again the person sold the property later for sold the property for $150,000. Now, did the taxpayer makes the profit of 150? So what is the profit here? So profit here. Uh, so can we say the profit is 150? The sale value is the profit? No, right? Because we need to see how much they invested to purchase the property. So the investment we call it as the basis. The investment is called the basis. So here we need to see, so to calculate, so generally income tax is on the incomes and gains. So if taxpayer having any incomes or gains, so on that we need to pay the taxes. So here the sale value, which is 150, and also we need to see the investment value for the property, which is $100,000. So here difference, which is 50,000 gain. So the gain also taxable. So to calculate the gain, we require two things. One thing is sale price and another thing which is the basis. So here this unit 6 will talk about the basis. So how to calculate the basis? Generally, the whatever the amount we paid to acquire the property, we call it as basis or investment value. So the investment value is not only the basis. So few things will add it to the basis and few things will reduce the basis. So we will cover those parts now. And here this entire sale value is not gain, so we need to see gain equal to sale price minus the basis part, right? So now we need to classify the assets. So before calculating basis, we need to see the classification of the assets. So we have different categories. So the entire assets we can classify into two categories. One is real property and another one personal property. So what is real property? Real property, which means anything permanently attached to the land. Anything permanently attached to the land. So, so anything permanently attached to the land. What exactly it means? So if you see, like let's say there is a building. Building is real property because it is the building is attached to the land, and house and land itself, which is a real property. Anything which consists of land or building always comes under real properties, or else I can say there is farmland, farming related land. So this also will comes under real property, or any office building and any mineral rights. So mineral rights are which are attached to the land, right? So this will comes under the real property. So these are real properties. So what about personal property? So personal property, which is other than real property. Everything that is not real property will comes under personal property. So we need to understand what is real property. Then other than real properties are comes under personal property. Everything that is not a real property, that is not real estate or real property, will comes under personal property. So let's say there is a car. So car will comes under personal property. Furniture or any equipments, computer, anything, equipments, computer, or any um anything other than, yeah, anything other than real estate property, real property will comes under the personal property. Now the properties we have classified into two categories. Two categories. One is real property. Real property is nothing but real estate property. We also call it as real estate property. Real estate property or real property. And now based on uses again, we can classify the properties into three categories. One category, either it can be real property or personal property. We may use the property for personal purpose, personal purpose and personal uses, and we can use the property for investment purpose, or we may use the property for business purpose. So you can use the property for either of these three categories. So you can use for personal purpose, or you can use for investment purpose or business purpose. Now if you can see the types of the property in general, personal real property and personal property, right? So real property which we can use for personal use. So real property which we can use for personal use. So in that case, so the best example for this, this category is um, personal personal or principal residency. Principal residency. So principal residency, you have a real estate property and you are using for your personal purpose. So principal residency, where taxpayer having a house, so which where he is living actually. So those kind of property which is real estate property and which is personal use property. And investment. So investment real property example, best one I can say land. So taxpayer bought the land and he holding the property for increasing value of the asset, which is for appreciation. So whenever there is increase in price, then taxpayer will sell the land for a profit. So those kind of properties which so here taxpayer will not use for personal purpose and he will not use the property in business as well. Just simply taxpayer will hold the property for increase in value of the asset. So this is the land, the best example for investment purpose and business purpose. So taxpayer having a property and he is using the property for business purpose. So like let's say office building. So taxpayer having a real estate property, buildings are real property, right? So taxpayer having a building and he is using the building for business purpose. So which is office building, which is a business purpose and real property, right? And if you can personal now, this is personal real property and personal property. Can we use the personal property for personal use? Definitely, we can use the personal property for personal use. Personal property we can use for investment purpose, and personal property we can use for business purpose as well. So the best example for personal property for personal use, car. So taxpayer having car, he is using for personal purpose. Personal purpose. So can we say the property which is personal property and that too which we are using for personal purpose? Yes, which is the personal property and we are using for personal purpose. And personal property which is using for investment purpose. So the best one I can say the gold. So taxpayer will buy the gold for investment purpose and they will sell the gold at increase in value of the gold. So in that case, this is pure of investment, right? So that too, it is not a land or it is not a building. So which is if the property is not land or building, always comes under personal property. and and of business use and personal property. So again, let's go with car. So taxpayer having a car and taxpayer using the car for business purpose. So which is personal property for business use property, right? Because getting this difference, personal use property, so personal property with personal use, and personal property personal property for business purpose. So these are the different categories. Okay.
Yes,
Yes.
sir. Yes.
Yeah. And now, one second, just one. Sorry. Okay. So in this topic, generally we talk about basis. So in this entire unit 6, we talk about the basis. So the basis generally, basis means the purchase price. So whatever the amount we paid for the for the asset, we will call it as basis. So it is not all the way all the case. So basis equal to purchase price. So generally we may in generally basis means purchase price, but not always. So basis means the total investment in the property. Total investment in the property, we call it as basis. So no, and here yes. So basis means the total investment in the property, we call it as basis. So let's say a taxpayer bought a machine. So the machine price is $10,000. Can we say this is the basis? Answer no. So usually when we purchase anything, so we usually will pay some sales taxes. So which is, let's say here, $500. And let's say for shipping of the machine, so we need to pay around $200. And installation of the property, which is around $300. So how much we invested and how much we paid for the property in this case? So how much we actually paid? So purchase price here only 10,000. So if you consider only 10,000 for the purpose of basis, then what about these other expenses, other amounts? So these also will be forming part of your purchase price. So which is the basis. So we will include the total investment in the property. So here we will include purchase price plus additional cost if any. So that will be part of your basis. So here we will sum up all these and resulting 11,000. So 11,000 will be the basis. So everything need to acquire and prepare the asset generally will part of the basis. So whatever we paid to acquire and prepare the asset. So we paid 10,000, okay, but to use the property in the business premises or in your premises, we generally we have to pay sales tax. And let's say taxpayer purchased one equipment, and for that, can he use in the showroom itself? No, he need to bring the asset to the place where taxpayer uses. So for that they need to pay shipping fees definitely. And also, so some equipments require some installation, so some expertise will come and will do the installation. For that they will charge some installation expenses. So we are not using the property immediately when we purchase the property. So we need to ship the property and we need to pay some expenses for installation. So all those, so until we use the property, whatever the expenses we pay, so those will be part of the basis. Okay. So here, what are the cost we will include in the basis? So we will see. So here, basis means not only purchase price. So basis equal to the total investment in the property. So what we include? What are the cost included in the basis? So we will see what are the cost included in the basis. Generally, sales tax. So sales tax part of the basis. In India we have GST, right? But USA they have sales tax. So sales tax is which is state level taxes. So some areas where you can see federal level, but majority of the sales tax are related to state level taxes only. So if taxpayer pays any sales tax, so that will be added to the basis. Like let's say taxpayer bought a car value which is around $30,000, and taxpayer paid $2,000 for sales. tax. So now tell me what is the basis in this case. So we paid purchase price 30 only, and can we include the sales tax in calculation of basis? Yes. So we will include sales tax in calculation of the basis. So the new basis will be, so the basis will be here 32,000. So why basis is very important? Because to calculate the actual gain, so to pay the income tax we require gain, right? So to calculate the gain we require sale price minus the basis part. So that's the reason calculation of basis is very important, right? And let's say this is in case of sales tax. And what are the other costs we will include in calculation of the basis? So first one sales tax, and second one shipping or freight. So let's say machine, taxpayer bought a machine, the machine value which is around $10,000. So to bring the asset to the business place, so we need to pay some shipping expenses. So let's say which is around $500. So what is the basis in this case? The basis will be $10,500. So next one we will pay some installation expenses. So let's say taxpayer purchased machinery which is 10,000, and for this installation cost around $2,000. Now what will be the basis? So basis will be here in this case 12,000. So purchase price 10, and installation, which is installation also required, which is mandatory to use the asset, we need to pay all these expenses. And also some equipments require some testing. So if taxpayer purchased any asset, that must be tested before use. So testing fee we pay, that must be asset must be tested before before use. So in that case, we until we use the property, whatever the expenses we pay, so those will be added to the basis. Simple thing. So until we use the property, until to bring the asset into normal stage to use, so whatever the expenses we pay, so those will be added to the basis. So testing fee, so have we used the property? No, right? So after use only we will, after testing only we will use the property. So we haven't actually used the property, so now but still we need to pay some testing fees, so those also will be added to the basis. So these testing fees will be added to the basis. Let's say there is a mission, so there is a planter machinery. The planter machinery purchase price $12,000, and for testing we paid around 150. So the basis will be 12,000 plus 150, which is 12,150. This is the basis. And also we have one more thing, which is seller's delinquent property taxes. So this generally we can see in case of real properties, real estate property or real property cases, we can see this delinquent property taxes. So what exactly it means? So let's say we have a landowner who is Mr. A, and we also have one buyer Mr. B. So Mr. B wants to buy the land of Mr. A, and A is not in a situation to pay the taxes of the property, so real property. So generally, if taxpayer having real estate property, they are supposed to pay real estate taxes to the state on yearly or quarterly, based on the state to state it will differ. So if you are having property, real property, we are supposed to pay real estate taxes. Real estate taxes. If taxpayer is not paying any real estate taxes, so the landowner here, so landowner is not paying real estate taxes. So these taxes we call it as delinquent property taxes. So to complete the sale, so the buyer wants to purchase the property, but the landowner haven't paid the real estate taxes. To complete the sale transaction, so all the delinquent taxes to be paid. So in that case, landowner is not in a situation to pay. So in that case, the buyer can pay the delinquent real estate taxes, which is part of the sale. So in that case, the seller, if seller owes some, let's say around $3,000. So seller owes $3,000, which is property taxes. So in this case, buyer paid the amount, resulting will be this 3,000 will be added to the basis. So here added to the basis. added to the basis. So sellers delinquent property taxes generally will be added to the basis, right? Because to complete the sale transaction, we must pay the at least either landowner should pay or buyer, seller should pay or buyer should pay. Seller is not in a situation to pay, so buyer is paying. So buyer is paying seller's delinquent property taxes, so those will be added to the basis, right?
Um,
This is it.
Sir,
Yeah.
if buyer pays the taxes, it will be added to the basis.
Yes.
If seller pays the taxes, it will not be added to the
It will
basis.
not be added to the basis. Yes.
Yes, okay.
And also major improvements. So major improvements generally what we have seen so far. So whatever the expenses we paid to the property till we use the property. So if you once you start using the property, so in that case whatever the expenses we paid, those we will not add. But until we use the property, whatever the expenses we pay, so generally will be added to the basis. Now here another one which is major improvement, which is additions that increases. So if taxpayer pays any additions that increases the value, so in that case increases the value, increases the value of the property. So these also will be added to the basis. So let's say there is a building, there is a old building. If taxpayer pays regular repairs, so regular repairs, do we need to increase, do we need to add to the basis? Generally no. So if anything that increases the value of the property, so if you are paying repairs, will it increase value of the property? Generally no, right? Repair to maintain the property in regular condition. Let's say the old building, for the same old building, taxpayer made some new roof. So new roof cases, so here the property value of the property value of the property which is $100,000. After new roof, the value of the property becomes $120,000 because they made some changes to the building. So they made some new roof. So with that, the value of the property increased. So increases the value of the property cases, whatever the expenses we paid. So here these are the expenses. So expenses. So these expenses, so can we add to the basis? So let's say repairs we have paid around $2,000, and here for new roof we paid around 3,500. So this repairs 2,000 we will not add to the basis of the property, but new roof we paid that. What happened with that? It increases the value of the property. So just so we can add this to 3,500 to the basis of the property. So the basis means the purchase price. Let's say we paid the property for around $50,000. So in this is the basis. So now in this basis, what we can add? Can we add repairs? So repairs we will not add. Repairs we will not add. So zero here. And what we will add? So new roof. So we will add a new roof which is around 3,500. So the new basis will be 50 plus 3,500, which is 53,500. This is the adjusted basis. So adjusted basis in this case 53,500. So what we will add to the basis, if anything, if any expenses that increases the value of the property, we can add to the basis, right? Yes.
Yes, sir.
Yes. And let's say there is a house. So for this house base is around $200,000. House base is $200,000. And taxpayer taxpayer placed one pool to the base to the house. So for the pool, taxpayer paid around $20,000. So what will be the new basis in this case? Can we add the pool expenses $20,000 to the basis? Yes, because this increases the value of the asset, right? So in this case, the new basis will be $20,000. Let's say same case. So here not pool. So here taxpayer paid some repairs. So which are repairs repairs around 2,000. Now tell me, can we add these repairs expenses to the basis of the asset? So what will be the new basis here?
200,000, same basis.
Same basis only, right? Because the repairs will not increase the value of the asset. So we will not add the repairs. Repairs are generally expenses. Repairs are expenses. This will not increase the value of the asset. So repairs like paint wall and any fixing leaks or replacement broken glasses usually will not increase the basis. So two things we need to remember. One thing is improvement. Improvement. So improvement cases, what is the treatment? So improvement cases, basis increases. So improvement cases, basis increases. And repair cases,
Basis remains same.
expenses. So no change in the basis. No change in the basis. So simply we will claim as expenses. And next one, legal and accounting fees. Legal and accounting fees. So what are the legal and accounting fees? Generally, to purchase a real estate property, we are supposed to pay some expenses, which are title transfer cost and some kind of record fees. And so these are generally legal and accounting fees. So these will be added to the basis. So we will see some examples for this. So again, we have separate topic on this. We will see in the same unit only. And so three things we need to remember to add to the basis. So first question you need to, if you see any expenses, you need to ask three questions to the expenses. So the first question is, uh, did it help did it help the buy to buy the asset? So if you are paying in expenses, it is actually helping to buy the asset. If yes, then simply add to the basis. Add to the basis. So second one, any expenses that helps to put the asset into services. So to help the asset into the services. So until we use the property, right? So simple thing, until we use the property, so to bring it to regular uses. So whatever the expenses we pay, so those will be added, right? So to help the asset into the service. So in this case, we will add to the basis. So and next final question, did it improve the asset or ownership? So anything which improves the asset or which improves the ownership. So two things here. So we have seen we have seen first category only. So improvements to the asset generally will be added to the basis. And some cases to defend the title. So generally this we can see in case of real estate properties. So that we will see. But for now, anything which improves the asset or ownership, so those will be added to the basis of the property, right? So this is general in case of uh, basis. So these are the simple rules. So one golden rule. So whatever the expenses we paid with the expenses, the property more valuable and improve ownership rights or permanent improvement in the property. So if yes, then those will be added to the basis. So this is in general, right? Next one, post acquisition cost. So post acquisition cost. So far we have seen expenses which brings the asset into service. So which bring the asset into service. So after purchasing of the property, after use, so we may pay some expenses. So those expenses we call it as post acquisition cost. So what are those? So after purchase, certain kind of expenses we pay. So those are capital expenditure. So those capital expenditure we have seen here in the improvement section, right? So improvement generally, so this happens post purchase only. After purchase and after use of some time, so we may pay some capital expenditure. So the capital expenditure also will be added to the basis. So here post acquisition cost. So post acquisition means after purchase of the property and after use, so we may incur some post acquisition cost. So if it is a repair, which is a regular expenses, then we will not claim and we will not add to the basis. If it is improvement in the basis, then we will add to the basis, right? So this is what we have seen. So formula for this, original basis will be, sorry, adjusted basis will be adjusted basis, which means to calculate the gain, we require the adjusted basis, right? So without adjusted basis, we will not calculate the actual gain. So first thing, we will see the original basis, and for this we will add capital improvements. Capital improvements we will add, and also we will add some capital cost. So all these will be part of the adjusted basis. So adjusted basis is very important in calculation of the capital gain. So to understand unit 7, you need to understand unit 6. So unit 6 is all about calculating the basis. So so far we have seen regular some expenses which we will be added to the basis. So some additional expenses which are capital cost. So those also will be added to the basis. The first one, extending utility service line. So what is it? What exactly this extending utility service? So what is general general meaning of utility, guys? Utility means yes, what is utility in general?
Like additional services.
Yeah, so generally electricity and water.
Phone bill.
Yes, phones, water, and any severe sewer connections. So these will be part of the utilities, right? So to use, like, so there is a property, so there is a land, and there is no building, so which is which is kind of vacant land. So taxpayer made some improvements, which is taxpayer made some constructions and he made some building there. And for that, to use the building, they require these utility services, right? So electricity, water, and these any you know regular utilities. For that, they need to pay some extra fee for the state government, so which are extending utility service line. So we haven't used the property, so we cannot use the building without the utilities, right? So that's the reason, if taxpayer pays any extending utility service lines, so those will be added to the basis. So you pay money to bring utilities lines to the property, to the same property, we need to pay some expenses, those will be added to the basis, right? So new property cases, these are the regular expenses we have to pay, so those will be added to the basis. So without these, without electricity, so the building will be valuable, no, right? So we need to pay some expenses, definitely, so those expenses will be added to the basis. So next one, uh, extending utility services will be added. And next one, impact fee. So impact fee, generally we pay. So impact fee, for new construction cases, we need to pay some impact fee. Impact fee means, so it is impacting the public, it is increasing kind of demand for roads and schools or drainages or water system. Generally, if there is new construction, then these will impact, right? So road will impact, and schools definitely it will impact, drainage, water system. So who will take care all this? The local government will take care all this. So for that, if there is any new construction, the new construction cases, the developers need to pay these impact fees to the local level governments. So these impact fees will be again added to the basis. So we need to pay these fees to the local level governments, like either it can be city or it can be county, or some cases it can be for town. So all those impact fees will be added to the basis, because new construction cases, what will happen? So this is in case of new construction. So new construction cases, it will increase the demand for, definitely for roads, yes, because new people will come to the place, and new people will occupy the place, and with that road definitely will impact and schools, and also it will impact some drainage systems, and also it will impact the water system. So who will take care all these? The local governments will take care all these, right? So for that we need to pay some impact fee to the local governments, so impact will be added to the basis. And next one, legal fee for perfecting title. So we have seen here improvement for ownership. So this is about legal fee perfecting title. So this is very important, guys. So the previous ones are might not be important, but this is very, very, very important in the exam. So legal fee, which is perfecting the title. So what is perfecting title means? Perfecting title means making ownership legally clear. Making ownership legally clear. So whatever we pay to make the ownership legally clear, so those will be added to the basis. So what type of expenses these are? So let's say you taxpayer bought a land, and that land belongs to taxpayer only. Now someone claiming, so this is belongs to taxpayer, so who is Mr. A, and again on the very immediate next day, so Mr. B came to the same land, and he is also saying I'm also the owner, so both are fighting each other. So who will win the case? So who will have the complete title, so they will win the case. So in this case generally they will go to court, they will definitely will approach to the courts. So A definitely will require a lawyer. So for that, A definitely will pay some expenses. So A is having complete ownership. So A now here he's defending his title. In that case, he will pay some expenses, legal expenses. So for lawyer, he paid around $3,000, and he won the case. And now again A becomes the owner, legal owner. So in this case, whatever the expenses we pay towards the legal fee, so those will be added to the basis. So court case lawyer 2000, and also for court generally they will charge some fees, court fees. So court fees around uh 1 second, guys. Yeah. So let's say for court fees, the taxpayer have paid around $2,000. Now the base is the original purchase price, the original purchase price of the land around $50,000. Now tell me what is the basis in this case? Yes, what is the basis in this case?
So it will be
55,000.
55,000.
So 3,000 for lawyer we will add, and 2,000 for court we will add. So the new basis will be $55,000. So why this base is adjusted? This is very important, because when we sell the property, we require the basis, adjusted basis. So that will determine your capital gain. For calculation of capital gain, the basis is very important, right? And this is another one. And also legal fees that legal fees to reduce the assessment. So here the previous one is different and current one is different. So here legal fee for perfecting title, so this is okay, this will be added. Now here we are paying legal fees only to reduce the assessment. So what exactly assessment? So the local governments will do some assessments. So this is something, this is something related to owner, which is for improvements. So which is for improvements. Improvements. So state governments will collect, or local government will collect some, from the property owner some kind of improvements. Let's say the local government wants to make some new sidewalks. Local government wants to make some new sidewalks, and also they wants to you know make some drainage system. So local government definitely they will collect the taxes from the real estate owners, the real property owners. So at that point, they will collect the taxes based on the property value, not based on the person's income. So that these are the assessments are based on the property value. Let's say our taxpayer, Mr. A, taxpayer paid around $100,000, which is the basis. So these assessment fees are not based on purchase price. So this is based on the value determined by the local government. Let's say the local government determined the value which is around $500,000, and on this he is supposed to pay 1%, okay, which is around 5,000. So here they assess the value which is for higher rate, so actual rate which is around it in between 200 to $300,000, but they assess the value for higher rate. In that case we are paying some extra fee, right? So in this case, can they argue with the local government? Definitely, he can argue the case with the local government. In that case, they require a lawyer, and this will be settled in the court. So in that case, let's say this the value should be maximum $200,000. So let's say we'll put 2 million, and here this is the case. So 50,000 the local government is asking to pay, but actually they are supposed to pay at $20,000. So for this, can they go to courts? Yes, they can go to courts. So they require a lawyer, definitely. Taxpayer require a lawyer. So lawyer up, file the case and they won the case. So now they are paying $20,000 only. Instead of local government are asking to pay 50, but they went to court and they won the case and they are paying now 50. So they reduced the here the assessment amount reduced to $20,000 instead of 50. They are paying 20. How much amount reduced here? So 30. So for this do they need to pay? Taxpayer need to pay to the lawyer, right? So those expenses, those legal fees will be added to the basis. Legal fee to reduce the assessments will be, these are the expenses, those will be added to the basis of the property, right? Clear, guys?
Yes. Yes.
Yes. And also one more thing, which is zoning cost. So zoning cost, these are the costs we generally can see in case of real estate properties. So what is zoning cost? So zoning cost, the government will decide the land type. So what land can be used? Like if you are in Hyderabad or somewhere, then you might be knowing Hydra, right? So Hydra, which is generally they will determine whether the property is which is residential or some kind of there is some issue going on, right? So they will determine, the Hydra will determine whether it is residential property or not. So if it is not residential, so they will demolish the property. So those kind of things they are doing here. So now zoning cost. So zoning cost, generally the government will decide what land can be used for. So let's say there is a land, so the land they can use for residential purpose, or they can use for commercial, or it can be industrial. So who will determine this? Industrial. So who will determine? The local government. The government will decide what type of property it can be, right? So residential or commercial, industrial, who will determine? So the government will decide. So let's say there is a property which is residential. There is a residential property. So taxpayer wants to use this residential property for commercial. So in that case, we need to pay some expenses. You cannot simply use your residential property. You cannot use the residential property for commercial. So to convert the residential to the commercial, we need to pay some expenses. Those expenses we call it as zoning cost. So for the government, we need to pay. So government will come and they will check all the criteria whether it is fitting into the case or not. Based on that, they will charge some fee. So those fees will be added to the basis, right? So So why? So with this, what will happen? If you are paying zoning cost, the property definitely the property value becomes more valuable. So this is permanent improvement only. So we generally will add it to the basis. So I guess there is one incident going on. I'm not sure whether it is correct or not. So I guess there is a property. One big actor, TFI actor purchased a property, and it was actually which is I guess this is farmland, and they took the permission from the government and they are using for residential purpose. So yeah, so these issues will go on in case of real estate properties. So to convert a property from one type of property to another property, we need to pay some government fees. So those fees here we call it as zoning cost. And next one, redeemable ground rent. So this we won't be seeing in India, but yeah, so this is there in USA. That too not in all the states. Few states this this kind of fees we can see, which is redeemable ground rent. So generally this redeemable ground rent we can see in specifically Maryland, the name itself which is land. Okay, this topic also about the land. So redeemable ground rent, what exactly the redeemable ground rent expenses? So can we, so let's say taxpayer, we have a taxpayer want a land, want a building actually for running his business. So he don't have a land, but he can build the, he can, if anyone having the land, he can build the building. So for this, taxpayer definitely want a land and he don't have a land. So his friend Mr. A is having a land, and now this our Z, taxpayer G. So taxpayer G build and building. So he build the property, and here who is the owner for land? So Mr. A is owner for the land and Z is owner for the building. Z is owner for the building. So G is our taxpayer. So every year he need to pay some ground rent fee. So because for land he need to pay some ground rent fee. So this fee every year he need to pay, right? So taxpayer after like he was paying from past 10 years. So taxpayer decided not to pay the ground rent. For that, what he need to do? So he need to settle some amounts to the land owner. So in that case, whatever the expenses paid by the taxpayer, so that will be added to the basis. Like let's say the building value, building $60,000, and every year taxpayer is paying per year, taxpayer is paying around $2,000. Instead of paying every year the ground rent fee, so taxpayer can pay a lump sum amount to the landowner, and in that case, it will become whatever the expenses paid by the taxpayer for ground rent. So to redeem the ground rent, so those will be added to the basis. So now there is an so Jed paid around $25,000 to Mr. A not to pay the ground rent every year. So this $25,000 will become part of the price, the basis. So 60,000 plus 25,000. So the new basis of the property will be 60 plus 25, 85. So this is in general, but this is not general in case of Maryland state, because Maryland, the history of Maryland is completely different, right? So many of the people having big so many acres, so many lands, so they will not sell, but they want the ownership of the property. Instead of selling, so they do give the land for construction. So in that case they will charge some money, which is ground rent fee. So yeah, this is something called redeemable ground rent. So these will be added to the basis of the property, right? Clear, Akash, this point?
Yes, sir.
Yes, sir.
And now tell me what will increase the basis and why. So first one, utilities. Will it be added to the basis or not? Utility line expenses.
Yes,
Why?
it increases the cost.
Yes, it will increases the cost. Impact fee. Impact
Yes, it
fee.
will be added.
So why?
It will be paid by the developers, so it will impact the demand of the Roads or drainage, the public usage.
which is mandatory, which is required, right? So which is required and which is required and which is kind of improves the property. And also title defending legal fee. Title defense legal fee. Shall we add this amount to the basis?
Yes.
Yes. So because it protects the ownership. So if you are not paying this, then you cannot protect the ownership. So we have to pay. So that's the reason it will be added to the basis. And court cost perfecting title, cost court cost perfecting title. So this is also same only, right? So this will protect the ownership and this will be added to the basis. And legal fee reducing assessment, will we add this amount to the basis?
Yes, yes.
Yes,
Yes.
so this will be added to the basis. But why? So this is related to the capital improvement, right? So this is also will increase the basis of the asset. And zoning cost. What is zoning cost?
So it's like the local
To
government which
convert
will decide.
a property either from residential to commercial or commercial to residential.
Yes. So in this case, we need to pay. So this will add the value. So this will add the value of the property. So this will be added to the basis. And redeemable ground rent.
Yes,
Yes, this will be added to the basis. So by this will acquire ownership right? So if you are paying redeemable ground rent, which means you are acquiring ownership rights. So this will be added to the basis. Okay. And next one. Uh, so these are the cost we have seen so far, which are increasing the value of the asset. So some cases, so it will reduce. So uh, other things, some other things will reduces the value of the asset. So not only the amount we paid, will be added to the asset. So some other items will reduce the basis. So first one, let's say taxpayer bought a new car, taxpayer bought a new car, and now will it be worth, so taxpayer bought today today and will it be worth same after 10 years? After 10 years, will it be the same value?
No,
Value will change, right? So it will
it
increase
will
or it will
reduce.
decrease?
Reduce.
It will reduce because of
Depreciation.
depreciation. Okay, perfect. But why depreciation? Because of wear and tear. So we are using,
Wear
right?
and tear.
So wear and tear are because of age factor, because of life of the asset, or technology changes as well, or any obsolescence. So these will be part of, these are the reasons for decrease in value of the asset. So if you are buying an asset, definitely we will use the property, so which will reduce the value of the property. We call this as wear and tear and age. So every property have certain lifetime. So after life of the property, so if life is increasing, the value also will decrease to the extent which is inverted way. And also technological changes are obsolescence, so both are same only. So if there is any change in technology, the price of the property will definitely will reduce, right, because of the change in technology. So these are the cases where it will reduce the value of the property. So in this case the gradual recovery. So whatever the recovery we have, whatever the decrease in property we have, so we will call it as depreciation. So we call it as depreciation. So let's say taxpayer purchased the machinery. So taxpayer having a business, so he is having a business and he is using one machine in the business. So he is using and he paid around 10,000 for the machine. So in the business he may be having incomes and he may be having some expenses. So now taxpayer purchased a machinery value 10,000 and life of the asset. So every asset might be having some lifetime, right? So life of the asset which is around 5 years. Now can we deduct? So can we show this $10,000 total as an expenses? So can we claim this machine cost 10,000 in the at the time of purchase? So no, because the life of the property which is not in single year, so it consists of more than 1 year, which is 5 years here, right? So in to be precise, to to make the expenses clear, so we need to claim these mission expenses not in a single year. We need to we have to claim over the period of the asset life. So 10,000 we paid, and life of the asset which is 5 years, so $22,000. So every year we can claim $2,000 as an expenses in the books of accounts. So every year we will claim $2,000. So how long? So how life of the asset cases? So here, so 2,000. So now total expenses becomes 10,000. So each year we can claim $2,000 expenses. So this recover. So instead of claiming 10,000 immediately, so what we do, we will recover it gradually year by year. So this is depreciation process. So which is so after 10 years, if you are claiming in expenses, then you are keeping some amount you are keeping some amount, right? So if you are claiming expenses now, so that means the amount is not going from your pocket directly, but you are making some amounts, so which is you are accumulating this amount. So after 50th year, again you can have these funds to buy the property. So this is kind of accumulation, which is the recovery cost. So this is what the depreciation here. So why depreciation important? So depreciation will reduce the basis of the property. So one second. Sorry. Yeah. So depreciation, what exactly depreciation will do? So depreciation will reduce the basis. So this is important. So how it will reduce the basis? So we'll see one by one. So what is the basis amount here? So basis amount is $10,000. So we understand one thing. So every year we will reduce $2,000 from the expenses, right? So now here basis amount 10,000. So year one depreciation. So how much depreciation in year one, guys? So year one 2,000 depreciation, right? So your adjusted basis will be 10,000 minus 2,000, which is adjusted basis. So adjusted basis at year end 8,000. So year two depreciation, which is around again 2,000. So now the new basis will be 8,000 minus 2,000, which is again adjusted basis at year two. So on it will become zero. So year fifth, your depreciation amount 2,000. So year 5 depreciation and adjusted basis from previous pre-year 2000, and now basis will become your basis will become zero after year 5. So how long we can claim depreciation? Until it becomes zero, we can claim the depreciation. Okay, right?
Yes, sir.
So depreciation is basis recovery. So here the basis, right? So basis means the amount we invested. So simply depreciation is recovery of the basis. So after 10 years, after 5 years, again we need to buy the asset, right? The same asset, because there won't be any value in the asset. So after 5th year, we must buy some asset again to replace that. So who will give the money? So you are keeping the money set aside, so that amount you can use after 5th year. So we can use the amount. And now, so how long we can claim the depreciation? So this is important. So until the basis becomes zero, or until sale of the property we can claim the depreciation. So let's say third year taxpayer sold the property, so can we claim depreciation again? No. So until sale of the property or until basis becomes zero, we can claim the depreciation. Okay. Situation 1, when the basis will stop? Basis
When the basis becomes zero.
Basis will stop in situation 1, basis fully recovered, which is the basis part becomes 0. So in that case, we will not do depreciation. Second case,
When the asset is sold completely.
asset sold, so in that case also we will not do depreciation, so basis will stop there itself and no depreciation. And what assets can be depreciated? Okay, we understand. So life of the property and the property value, we need to claim every year some amount. To that amount we will reduce from the basis. Okay, so the basis will reduce, the depreciation will reduce the basis, we understand that. But what assets can be depreciated? Can everything be depreciated?
No.
So everything cannot be depreciated. So what can be depreciated? So depreciable assets must be wear out or become absolute. So those assets only be depreciated. So let's say we have a building. So anything, if we are using something, then value will fade out. So those kind of assets, we will, those kind of, for those kind of assets, we can claim depreciation. If you are using building, will asset value will reduce by usage? Yes, definitely. If you are using the building, definitely the value of the asset will decrease. So we can claim depreciation on the same. Machinery, yes. So machinery cases also we can claim depreciation. Equipments, yes. Vehicle, furniture, anything. We can claim depreciation on anything which we are using for business purpose or rental purpose. So some assets which are non-depreciable. Anyone know?
Land.
Student, you might be knowing. So no depreciation on non-depreciable asset. What is the asset, guys? Non-depreciable asset.
Sir, land.
Land. So we can claim the depreciation only if you are using, and because of the usage, the value of the asset will reduce. So if you are using land, value will reduce.
No.
No.
Because of wear and tear, land value will not reduce. So generally, no. So land value may reduce some cases, not based on wear and tear. So because of changes in the so that is based on outside factors. So in that case it is the value of the asset may change, not because of wear and tear. So in that case the land value majority of the cases will increase only. So we cannot claim depreciation for land. So no depreciable asset. Non-depreciable asset, which is land value may increase, but it will not becomes absolute through because of the usage. Okay, building gets old but land stay land only, so it will not change, it will not reduce the value of the land. Let's say there is a purchase price. So let's say taxpayer purchased a rental property, and the property taxpayer paid for $300,000, so which includes land component, which is around 60,000, and also building value $240,000. $240,000. Now depreciation we have to claim year on year, right? So how much depreciation we can claim? So let's say the value, the life of the property, which is 27.5. So we will claim depreciation. So how to claim depreciation? In general, life of purchase price of the property divided by life of the property. So we paid around 300 divided by 27.5. So year on year, every year we can claim this amount as depreciation. So how long? So till 27.5 years, or the till basis becomes 0, we can claim the depreciation. So this is correct, guys. Is it making sense, this depreciation amount?
No, it should be based on building.
Yeah.
Yeah, we cannot claim the depreciation on the property value. So we can claim the depreciation not on building, not on land. We can claim the depreciation on the building only. So here, instead of claiming on total value, so if you are getting, so generally, if practically this we can see, so 80-20% rule. So we will keep 20% for land and 80% for building. This is in general. If there is no bifurcation between land and building, so taxpayer usually will give the total value of the building. So in that case, we have to bifurcate between land and building. So general rule 20/80 again depends on CPA to CPA and depends on area. So we have so many sources where we can bifurcate the land and building. So this is a big topic again. But for now, if you have clear information, then this is the way. So now we can claim the depreciation on the building part only. So here, so this is the depreciation value. So we will not claim any depreciation on the land. Okay. So most important one, residential rental property. So here taxpayer having a property which is rental property which is for residential purpose. So the properties we can classify again, the real properties again based on usage we can classify into two categories. One is residential and another one commercial. So to consider a property as residential property, so we should have the income more than 80 percentage from residential purpose only. Residential only. So in that case, we will classify the property as residential rental. And if the income from the building, which is less than 80 percentage from the residential purpose, then we will consider the property as commercial. So this classification is not required for now. But for now, so taxpayer having a property which is residential rental. Residential rental property. So in that case, the life of the property as per IRS, which is 27.5 years. The maximum life of the property. So every property have the own IRS list life of the assets we have. So the list we will see in the depreciation topic. But for now, residential rental cases, the life is 27.5. This 27.5 is very important, even though you know, but yeah, so this is important in the exam. Okay, this is clear, guys.
Yes, sir.
Yes.
Yes, sir.
So in the depreciation is nothing but which is cost recovery. So after life of the asset, again we have to buy the asset, right? So for that we are just recovering the cost. So depreciation is nothing but cost recovery. Depreciation will reduce the basis. So building can be depreciated and machinery can be depreciated, but anything can be depreciated, but land doesn't depreciate. So this is important. Land doesn't depreciate. And residential rental property cases, the life is 27.5 years. So when depreciation when ends in two cases. So in two situations, depreciation ends when basis is recovered full or asset is sold, then depreciation will stop there itself. Okay. And now next one, next important area, which is holding period. So we understand some amounts will be added to the basis and some amount will be the basis. So after assessing the value, we need to see the holding period. So holding period of the asset is important. So holding period means, what is holding period in general? So holding period means uh, so date of sale and date of purchase. So here we require two things: date of purchase and date of sale. So here, for the purpose of holding period, we will exclude date of purchase date. So after that date, after date of purchase, so the next day to the date of purchase, next date to the date of purchase to the date of sale will be your holding period. The holding period will be of next date to the date of purchase to the date of sale. So the period we call it as holding period. So the calculation of holding period is important. Okay. So now after calculating this number of days, so okay, we calculated holding period. Let's say date of purchase is on June June 1st, 2024. June 1st, 2024. And date of sale, June June 2nd of 2025. Now tell me, guys. So what is the holding period in this case? So holding period cases, we require two things. One is date of purchase and another one date of sale, right? So here we have date of purchase and we have date of sale. So can we calculate the holding period in this case?
Yes, sir. It is
Yes.
1 year, 1 day.
Now how many days here?
366 days.
366 or 365?
365.
365 days. So we have to exclude the date of purchase. So we require the next day to the date of purchase, next day of the date of purchase, which is June 2nd. So holding period calculation will start after date of purchase, not on the date of purchase. We will exclude this and it will start from the next day of the date of purchase. So here we have 365 days. Okay, we calculated the date of purchase. So now what is the next important thing? So after calculation of date of purchase, after calculation of holding period, so we can classify these properties into two based on period of holding. So one is long term and another one short term. Long term and short term. What will happen if it is long term and what will happen if it is short term? Before that, let's understand tax rates in USA. So there are two types of taxes. One is ordinary and another one special tax rates. So we know, right, ordinary tax rates in USA 10, 12, 22, 24, 32, 34, sorry, 30, 32, 35, and 37. These are the tax rates in USA. We have, based on the filing status, based on the income tax rates will increase, which is progressive based income tax. If your income is increasing, your tax rates will increase to the extent based on the slab. So no need to remember. In the material, we have the thresholds. Thresholds are not important, but just understand the tax rates and special tax rate 0, 15, and 20. These are the tax rates in case of special tax rates. So these special tax rates will be applicable for long-term capital gains. Long-term capital gains, and also we have seen in case of interest and dividend. Anyone remember special rates we will apply for in case of dividends?
Qualified dividends.
Qualified dividend. Qualified dividends are subject to long-term capital gains rates only. So that's the reason in Schedule D, if you see, along with long-term capital gains, we also include the qualified dividend in the calculation, right? So we will see in the next topic in case of capital gain. So in that case, you can understand the qualified, dividend also. And now, why special rates? Okay, we understand there are two types of taxes. So why is special tax rates? So for qualified dividend, we understand. So because of the corporate taxes, corporate will pay 21% tax. So again, taxpayer also supposed to pay taxes, which is cascading effect, double taxes. To avoid that, we have the provision of special tax rate. Again, if taxpayer income is low, then no need to pay. If taxpayer's income is in mid level, then he need to pay 15, and high income 20. And what about long term capital gain? Why special tax rates for long term capital gains? So long term means to consider it as long term more than 365 days. So short term less than or equal to 365 days. So if the holding period of the property is less than or equal to 365 days, then we call it as short term, and for that whatever the gain we have, we call it as short term capital gains. And if you are holding a property and the property which is long term holding property, and if you have any gain on the sale of the property, which we call it as long term capital gains. So okay, we understand which is long term capital gain and another one short term capital gain. But why special tax rates? In Indian tax, we have something called indexation. Generally, let's think about, uh, there is a property. So taxpayer purchased a property which is around for $10,000 in 2010. In 2010, and which is a kind of land. The same land, can he buy in 2026 with the, so let's say which is around 100 SF, 100 cents at $10,000. So can he buy the same, so adjacent to the land, so another 100 cents available. So can he buy with the same price? No, definitely no. So it might be around $100,000. So because of why price change we can see because of inflation. So inflation in 2010 rate inflation will be different and 2026 inflation will be different definitely. So that's the reason within the same year definitely there won't be so much inflation we can expect. But once it is in next year, so definitely there may be change in the inflation we can see. So that's the reason for long term cases we instead of giving inflation directly, so the benefit taxpayer can get because of these special tax rates. Because long term cases there may be possibility for inflation, right? So to adjust the inflation, special tax rates we have. But ordinary cases, if it is short term, definitely there won't be any change in inflation. So that's the reason it will be taxable at ordinary tax rates. Okay, right?
Yes, sir.
Yes. So now here we understand long term and short term, and now next important terminology which is disposition. So in Indian tax we call it as transfer. So in capital gains, so there is section 45. So based on under section 45 in Indian tax, so we use the word called transfer, but here we use the word called disposition. So disposition means, so let's understand what is disposition. So disposition means selling selling or exchanging exchanging or trading or any giving away or destroying or abandoning. So all these again is same in Indian tax also we have. So transfer includes sale, exchange, extinguishment, relinquishment. So here we have same kind of technologies. So disposition. So disposition means which includes sale, exchange, trading, giveaway, destroying, or abandoning. So if taxpayer no longer owner of the asset, then what will happen? So taxpayer owner previously, but taxpayer now no longer owns the asset. So then what will happen? So which is nothing but disposition. So disposition cases, it will be subject to income taxes. So if taxpayer is selling a property, then whatever the gain he is having, he need to pay taxes on the same. So if taxpayer exchanging, so all if they include only sale, then they may use other ways to evade the taxes. So that's the reason IRS also know what are the ways taxpayer can use not to pay taxes. Again iris will close the loops. And so here they introduce something called disposition is nothing but selling, exchanging, trading, giveaway, destroying, or abandoning. If taxpayer is doing any disposition, that will be part of the capital gain, so they are supposed to pay taxes on the same if they have any gains. Okay, so for this we have this uh, period of holding. So we know how to calculate the period of holding, and with that we can calculate whether it is long term or short term. So short term cases 1 year or less. So short term 1 year 1 year or less. So long term will be
More than
More
1 year.
than
1 year plus 1 day. 1 year plus 1 day. If it is more than, so simply you can remember in this way. So shorter means 1 year or less. So 1 year plus 1 day, so will become long term. So is that really important? Short term or long term?
yes,
Yes, important because of
tax rates.
Rate.
tax. So short term gain, if taxpayer having short term gain and long term gain, so will he pay taxes on both gains at same rate?
No, different rates.
Different rates. Because of? Because of IRS have given the option to the taxpayer, because of the it can be inflation. So many reasons IRS is also having, because today's 1 rupee will not be equal to tomorrow's 1 rupee for sure. That we know, right? So long term cases, taxpayer may purchase the property years back and he may sell the property now. So the cost value will not be inflated because of year changing of the year. So for the benefit of the taxpayer, they are giving the special tax rates to adjust the inflation portion. Okay. And also uh, so to calculate the gain, so we understand we can calculate capital gains based on cost basis and based on the adjusted basis and based on selling price and based on the period of holding, we can calculate whether it can be short term or long term. But before that we also understand what type of asset it is. So we need to calculate a gain or loss, we need to understand what type of asset type is very important for calculation of the gain. Asset type. So what are the types of asset we have seen, guys? Anyone remember?
Real and personal.
Yes. And based on usage,
Um,
personal use.
Personal, investment, and commercial.
Yes. So personal use, business use, and investment use. Because the
Mm.
treatment will differ for all these cases. So if taxpayer selling personal car and which is personal use property, and taxpayer sells rental building, then which is investment or business property. So how much actually was invested? So many factors we require, right? So that's the reason understanding the asset type also important. And can you tell me, common basis increases, what are the areas where the basis will increase based on the above? Common basis increases.
Any legal fees incurred?
Which one?
Legal fees incurred.
Legal fees. Okay.
Major improvements.
Utilities costs.
Which one?
Utilities cost.
Utility. Extending utility. Okay.
Installation cost or sales tax cost.
Yes. Installation, sales tax.
Legal perfection.
Title perfection.
Yeah, title perfection. Legal assessment. Reduce assessment.
Okay. No one remember. Only two people.
Accounting fees.
Okay. Accounting fee and
Um, Zoning cost.
zoning cost. Perfect.
Impact fees.
Impact fee. Okay.
Property taxes.
Only property
Um,
taxes.
no, late property taxes which the owner is not able to pay. Delinquent property taxes.
Sellers, delinquent property taxes, real property taxes. Okay.
Shipping cost.
Shipping cost. Okay. So generally these are the cases where we will increase the basis. So basis that decreases. So anyone remember? Only one point we covered. So other areas also that will decreases the basis. So what decreases the basis?
Depreciation.
Depreciation. And also if there is any casualty losses, casualty or theft losses. So if there is any casualty loss, so that will impact the basis. So the basis will reduce to the extent of the loss. And also insurance reimbursement. insurance reimbursement. If taxpayer receives any insurance reimbursement, so that will reduce the basis, and also any rebates. So insurance basis generally, let's say there is a taxpayer, he is having an asset, and asset value which is around $30,000, and now because of natural calamities, the asset destroyed to some extent, and insurance company paid around $16,000. In this case, the new basis will be 30 minus 16, because insurance company have reimbursed, right? So the amount will reduce the basis. So insurance amount will reduce. Or else any rebate. Let's say taxpayer purchased the property for $20,000. Government have given insurance. So let's say there is solar property. So some state government will give some discounts or rebates. Let's say $1,500 government have given some rebate. So now new basis will be 18,500. So these are the cases where the basis will reduce. Depreciation, casualty or theft losses, or any insurance reimbursements or rebates. So this will become your adjusted basis. So
Sir,
adjusted basis.
rebate is subsidy, right?
Yes.
Okay.
So adjusted basis is nothing but updated basis. So we usually have to calculate, for calculation of capital gain, we require adjusted basis, not actual basis. Basis is the amount we invested to purchase the property. So some items will increase the basis and some items will decrease the basis. So we require the adjusted basis. So the updated basis, year on year basis will increase or decrease, but no matter what, we require the updated basis to calculate the capital gain. So we call it as adjusted basis. Okay. And now another one, sale proceeds. So we understand for calculation of capital gain we require the adjusted basis, which is updated basis. So what about sale proceeds? So to calculate a gain we require two things. One thing is sale price and another one adjusted basis. So now how much the taxpayer receive? So which talks about the sale proceeds. Let's say taxpayer sold an asset for $250,000. So this will be the sale price. Yes, this will be the sale price. So sale price is nothing but amount realized or sale proceeds. Sale proceeds. So this is about amount realized or sale proceeds. Generally, uh, how to calculate the capital gains or loss. So if it can be gain or loss, how to calculate? We require amount realized minus adjusted basis. Adjusted basis or updated basis. So updated basis just for your understanding purpose. So but in the exam they ask you in adjusted basis this terminology only. Updated basis, that this is our terminology, not exam terminology. So gain or loss will be amount realized minus adjusted basis. Okay. So let's say there is a rental property. So there is a rental property. The purchase price is around $200,000, and now taxpayer made some improvements. Which is around $20,000, and taxpayer claimed depreciation, which is around $10,000. Now tell me two things. So another one sold at $260,000. Now tell me, what is the gain in this case? We need to calculate the gain. Gain formula, amount realized minus adjusted basis. So now what is the amount realized here? 260, right? The amount realized will be 260 minus adjusted basis. So what is the adjusted basis here? So okay, purchase price 200 and improvements. So will we add or we will reduce these improvements?
Add.
Add. Depreciation
Minus.
Reduce.
minus. So the resulting will be adjusted basis, which is around 210,000. So gain will be
This is minus.
$50,000, which is the gain. So if it is more than 1 year, if it is more than 365 days, then long-term capital gain. If it is less than 1 year, then short-term capital gain. Okay.
Yes, sir.
Yes. So what is basis and what is adjusted basis, guys? What is the difference between basis and adjusted basis?
Basis is the original cost. Adjusted basis is after adding or reducing from the basis
Can we say updated investment?
updated investment.
Yes. So basis means initially. So when we purchase an asset, so initial price, initial expenses or initial investment on the property, we call it as basis. Adjusted basis means every year the original basis will not be the same. So it will increase or it will decrease based on few factors. So if we are adding something to the original amount to the basis, so your adjusted basis also will increase. If you are decreasing something, your adjusted basis also will decrease. So here this purchase price is your basis. So this is your basis and this is your adjusted basis. To calculate the gain, we require updated basis, not original basis, right? So this is the difference between basis and adjusted basis. So what is amount realized? Amount realized is nothing but sale price of the property. And to calculate gain or loss, what we require? Two things we require. So one thing is amount realized and another one
Adjusted basis.
adjusted basis we require, right? So this is also important. And now, okay. So we have completed. Okay, guys. So I guess that's it for today. We will try to complete this topic in the tomorrow session. So probably I will be traveling tomorrow. If yes, then we won't be having session tomorrow. If no, then I will update the same thing in the group. So I will be going to Tirupati tomorrow. So um, we'll see and we'll plan accordingly. Okay.
Sure, sir.
Okay, guys. Then we'll see in the next session. Have a nice. Any questions before winding up?
No,
Sir,
sir.
I have a question
Yeah.
with related to delinquent taxes.
Yes. Yes.
So if we pay the delinquent taxes, it will get reported in 1099 as real estate taxes paid, right?
Correct.
So how can we update or use it for basis?
We can see there is something called debit side and credit side. So two things they will give. So one is seller point of view and another one buyer point of view. So we will add only the seller delinquent real estate taxes, not buyer real estate taxes. So at the time of purchase, so they may pay some buyer side real estate taxes as well. So those will not be added to the basis. So only those which are delinquent. So we can see prior year real estate information. So like let's say if you are buying in 2026, so you may see those kind of words like 2021 real estate taxes, 2021 real estate taxes. So those are sellers real estate tax, even though they are not giving specifically, but those are related to the previous owner real estate taxes. So those will be part of your basis.
Okay, sir. Thank you.
Dharmik? Hello, Dharmik. Any questions? No, right. Shweta, Vishnupriya? No questions. Okay, then we'll see in the tomorrow session. Next session. Have a nice day.
Thank you.
Thank you.